afternoon, everyone. I hope that you've had a great trading day. I want to welcome you to our I Want to Be a Trader series and introduce you to someone that you may not know. Hopefully you know him very well by the end of this presentation. His name is John Person, and he has a rather interesting app in the App Store. It's one of our top app providers in the App Store, the Person Pivot. So we're going to talk about John's trading strategy today in our I Want to Be a Trader series. As always, I am Don Prattle from TradeStation, and I want you to know just a couple things. That our presentation is for educational purposes only. All the symbols and trading ideas that we're going to discuss here are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind, any place where a TradeStation affiliate is not authorized to do business. Remember that active trading is not suitable for everybody, may not be suitable for you. You have to know what your own suitability is. Options carry a high degree of risk and may not be suitable for all traders. Please read the disclosure information that I posted in that chat panel, and that information is also available on the TradeStation website. TradeStation offers a premium platform customization and setup that's tailored to your own unique needs. You can schedule a 60-minute one-on-one session with a TradeStation platform coach, and that would include platform training, trading environment setup, and customization. So make that online reservation now and schedule your session. So here we have a snapshot of John down in the lower right-hand corner of the screen, teaching a bunch of traders like us about Person's indicators, and I want to introduce him to you now. So John, take over.
Great. Thanks a lot, Don, for the introduction. Yeah, that is actually a part of the indicators that I use in the Person's pivots. And thanks everyone for being here. I see we have a few people from all over Colorado, it looks like. We got Seattle. I'm thinking that's Steve B from Seattle, though. Yeah, and sure it was. Boston, Brian. I was just up there in Beantown 3 weeks ago. I don't know if you were the MIT group up there. Always wonderful to meet up with the folks in Boston. So in this seminar, Rommel wants to know, is the seminar futures-based? Well, it's kind of both, because in my world of technical analysis, indicators should be, if it's a system or methodology that is worth anything, it should be applicable across different time frames and asset classes. And we're going to go through how we utilize it for not just futures or day trading futures, but also for equities and position trading, and what some of these indicators are based off of, and what the methodology that I've been using and creating from my experience when I first started in the business in Chicago in 1977 as a runner, and then later went on to work for George Lane in 1980. So let's get started. I think you'll find a lot of fabulous ideas from today's presentation, and also we'll go over in the App Store where you can, number one, get some indicators we created for free, as well as take a trial for indicator packages if you're interested on my advanced trading package. So let's get jamming here. Please take a moment to read this disclosure and sure everyone's aware this is trading is risky. Again, the key component is always past performance is not indicative of future results, and I am not associated with TradeStation as an employee, but in any event, with that said, we get that out of the way. That'd be awesome, and we did. Okay, so a couple of things that we're going to talk about today. One item which I created a bunch of indicators based off of this book right here, which was launched first of its kind to combine, and even anyone talking about candlesticks with pivot point analysis. A lot of great systems came out of this book right here. I have been in the process for the last year to come out with the second edition. It's a slow process because, well, writing takes some time, but about 4 years ago we came out, which is now 5 years old. You write a book, it takes about a year. this book, Mastering the Stock Market. Phenomenal book. A lot of the indicators for stocks, for position swing trading can be found in that book right there. I was also the contributing editor for the Commodity Traders Almanac, which was a fabulous book. We did that book to Jeff Hirsch and myself for over 8 years, and my contribution was to actually bring in a lot of the newfound ETFs that were being created, as well as stocks that were highly correlated or had a high beta to the underlying commodity. So as you can imagine, for equity traders now, you look at gold, and we have nugget, and we have the gold miners, we have the junior miners, and symbol on the miners, of course, GDX, people are familiar with. As far as energy is concerned, obviously, and we're going to tap into what my system or indicators are pointing to right now for particularly energy and as it relates to some of the energy sectors, specifically the oil service sector, OIH, as well as the oil and gas exploration, XOP. So we're going to cover that a little bit today and show you what's really going on, as well as take a look at what indicators can help you with to define whether or not a trend is strong, and we'll take a look at other indicators that I look at to find out whether we should be significantly hedged in this environment or letting things run. So I've got a lot to cover, and I'm sure a lot of you guys are not new to this field of trading, and if you are new to the trading arena, I think you're going to enjoy today's presentation from just the perspective of what tools are out there other than, you know, your traditional moving average and price-based indicators. So there's just a bazillion, maybe not a bazillion, but there's an awful lot of price-based indicators that people use. Oscillators, stochastics for one, which was my mentor and boss for over 2 years, George Lane. He created stochastics. MACD, moving average convergence divergence. Jerry Appel actually prefers MACD, but CCI, the list goes on, Wells-Wilder, RSI, relative strength index. And we've got a little indicator that we use here. It's a very powerful indicator, but it has nothing to do with price-based indicators. One is what we look at is in terms of relative strength or comparative analysis. So commodity traders, you'd be looking at maybe the term spreads, comparing corn to wheat or corn to soybeans, or looking at the crush spread, which would be comparing crude oil to the products, heating oil and reformulated blend gasoline. So anyway, these are things as far as commodities that we've been looking at, and nowadays, since we have a plethora of ways of trading a market, we have the underlying commodity, we have ETFs on the commodity, inverse ETF on the commodity, options on the commodity, and once again, equities, and then equity options that are commodity based. So there's just so many different ways that we can trade a market nowadays, and with the push of a little single mouse. And I think that one of the indicators that I've created, and another one that I popularized, and many of you have wrong button, sorry, my bad, presentations before. I helped and even talked about it in this book, but more importantly, really helped popularized the indicator called Joe Granville indicator on balance volume, OBV. It really did a wonderful job in helping to track volume trends rather than looking at the histogram. A lot of times we had seen where the histogram would point to a lower trend in volume, and meanwhile price keeps chugging along, but on balance volume by its very nature would show divergence between the trend of the volume histogram, and I'll share this with you instead of just drawing it on a chart. And what my thesis was back in 2009 when I came up with this conclusion was that due to the increase of options, due to the increase of use of ETFs, it was diluting the volume analysis, and so therefore, you know, the on-balance volume was a great trend tool because it just differentiated the a positive day versus a negative day's volume change, and it added that total on a cumulative basis. So we were actually seeing better volume readings from the OBV. Later, at approximately 2012, 2013, I started to note, and even last year, I started to note that volume trends started to, especially with the OBV, not be as reliable. We looked at not just in terms of looking at the volume in absolute readings, but in terms of percentage. And we created a volume indicator which has been just absolutely dynamic as part of our indicator package that we have. So volume is still in my mind and in my daily trading very important tool. I still feel it's the lifeblood of the market, but through all of these other derivative products, it has definitely diluted what we look at. And I'm sure everyone's familiar with listening to people try to find unusual volume activity. I don't really look for unusual volume activity because between calendars, between hedges, between institutions being a little smarter than the average bear out there, they lay positions down over time. We can track volume, unusual volume activity, but it's becoming a little bit more difficult. So I always like to do my own homework and look for the opportunity by looking at the indicators and looking at price-based analysis and using the tool such as radar screen and, of course, TradeStation's scanner feature to help me find opportunities, and then I apply and start looking for option strategies. So anyway, that's always been my premise. And just to let you know, I kind of started trading options, I actually started trading options back in 1984 when they were first introduced at the Chicago Board of Trade on Treasury bond futures. So I've had a little experience with trading options for quite some time, and this presentation is not about options per se. It's more about directional trading ideas as well as what my tools are that are available on, and some of them are only exclusively available on TradeStation. In addition, I'm a member of APTA, which stands for the American Association of Professional Technical Analysis, and so therefore it's kind of a nice little group of guys that are in the field of, well, I guess gurus of technicians. Anyway, one of the indicators that you may find that is on TradeStation is called the person's pivot indicator. It gives us defined triggers, it gives us a momentum histogram, and we have that knowing a little bit about seasonal price patterns and volumes. I think it gives traders a little bit of really a dynamic edge in the marketplace. So person's pivots are based off the regular math formula, which you can find anywhere. The only difference is that we came up with a couple different things. What's available on TradeStation for free are the daily pivots. And this is a really interesting tool, and I'll share with you in just a second, but that's absolutely free. We also have weekly pivots on our professional package, monthly pivots, financial quarterly pivots, and one other is called option expiration. Since the options or indices on a monthly expiration, now we got weekly. We don't have weekly. You could use the weekly time frames because the weekly pivots correspond with weekly expirations, right? But instead of the calendar month, we use the third Friday or the option expiration. And a lot of your heavily pinned or traded, institutional traded markets, Apple, for example, the ETFs like the Qs or the Diamonds or the Spiders, they also really mesh well with that option expiration. So for me, in just the dynamics of how they work, they are what I consider a leading price indicator, and it helps confirm market condition. What I mean by that is if we're expecting a market to go up, if it's bullish, we would expect to see a potentially higher high and a higher low, correct? So you'd see that if the pivot point analysis at the end of one day, and I'm going to just draw a bar chart here, kind of a really bad one. if we're bullish in the market, then you're looking for possibly the next time frame to give you a higher high and a higher low, and that would give you that trending up type of concept. Well, with Person's pivots, what they do is they, based on a moving average function, they actually target a resistance and a support to meet that particular criteria. So we're not looking at all of these lines on our charting. So it helps actually define what the market condition is based on a set of moving averages. So this is something that is an interesting little chart. We've done this before through when we did the weekly morning briefings. Every Thursday we would give, from week to week what the market conditions are doing. As you can see, this is the on-balance volume tool. As price is rising, we see a rise in the accumulation of the on-balance volume. As prices start to maybe flatten out and start to lose their momentum, you get that on-balance volume start to weaken. This is, by the way, a momentum indicator that's part of my package, which starts to actually show that as the price is rising, this is a price-based indicator, the volume is starting to flatline, and we're starting to see to maybe trust sell signals in the market. Person's pivots help define at the end of one time period. What they do is they give us a defined range of what should be for the next time period. So they're starting to show that we're getting higher highs, but then all of a sudden, when the market starts to lose that momentum, you start looking at potentially what the next or the target of support will be. So we also, in this platform, by the way, or this package, if you have noticed, we have these arrows, which is a momentum indicator, which gives us bullish and bearish signals. So what we look for is if the market is bullish, we look for it to pull back to maybe near support, and we look for buy signals to take buy signals up against support. And inversely, if the market's starting to reflect maybe a bearish market condition, volume starting to weaken, maybe we trust those sell signals a little bit more. So we'll go through that a little bit today in today's session. So I just wanted to give you a little bit of background what is to be covered and discussed today. So when we look for moves in the market, instead of on-balance volume, this is a specialized volume indicator that instead of using actual volume levels, we look at changes in percent of volume. And so if we see that a market's rallying, but the percent change of the volume is starting to dissipate, it really does show and pick up volume divergence patterns. So if you get a market that makes a higher high than a preceding high, is the volume showing divergence? And that is a really slick advanced tool that helps give us confidence that perhaps this is not the time to buy, and perhaps we can trust and give a little bit more emphasis to the sell signal, knowing that the market is rallying on a defined weakening volume condition. The fact that we're near Person's pivot resistance also helps define a weakening condition of the market. So these are things that not only do we combine and share with people some advanced teachings that give you emphatically a market may go up forever, and that's great, but eventually it's going to run out of steam. And when you get near a predicted pivot resistance, then you get a sell signal. For day traders, for example, you may trust that you could look at that sell signal a little bit better. Also, if you'll notice here, as the market gives a lower low reading, right, and it gets near a predicted Person's pivot support target, that is something that then you get a defined buy setup. This is one of the things that I really kind of look for on a given day, is that if the market is showing, if it's supposed to be weak, guess what? It shouldn't break support. We would be looking for a buy signal near support, especially if as the market has moved lower and made a secondary lower low from a primary low, and the corresponding volume indicator has given a higher reading, shows us that that is a volume convergence pattern, and we can kind of trust taking buy setups off of that support. So this is a defined indicator package that works across various markets, of course, and in absolutely different time frames, as we'll share with you in just a moment. So it's exciting to kind of give a little bit more education to you know, a wider audience within TradeStation, because many of the TradeStation clients are a little savvier with technical analysis, since, you know, bottom line, that's what TradeStation was built off of. People using technical analysis and creating their own indicators. Now, the first book that I shared with you, Candlestick and Pivot Point Trading Triggers, it revealed a little bit more about a couple patterns, and one was called what I taught for now over 20 some odd years, what we called the bullish high close doji setup. Being a trader, I'm looking for one of the most advanced and high probability buy signals. And generally speaking, after a downtrend, when we would see a doji which marks indecision, and simply a candlestick pattern that closes at or within a certain percent of the overall range or right at its open, it forms that little cross. If the market within so many bars closes above the high of the doji, we actually color coordinate that with an orange candle. That gives us an alert that that's not just any old buy signal. That's a high alert buy signal. In fact, over here, notice that the light blue candle was a doji, and that orange, as I was just defining, it changes into a defined high close doji setup. It also just defined being in a bullish buy signal with the arrow pointing up. So my indicators are based on price, but also a combination of algorithms that I think in this computerized era and having the power of TradeStation behind us enables us to better filter out trades under the right conditions. Now, this is the bearish low close doji setup. It's a very powerful setup, and again, what has to happen is a few things. After an uptrend develops, you get an uptrend in the market, a doji. Within so many bars, if we get a close below the low of the doji, a sell signal would trigger. And in this case, this would be defined by a purple colored candle. So we can see a purple colored candle. Here is the doji. Of course, it gapped lower. And then we have a defined profit target that is set, which is something that is really nice about TradeStation, is that the fact that we can code our own ideas, develop our own strategies, and we can automate those. You can turn on the automation, or you can use them as an indicator. Now, as you see here, we get one of those little orange buy signals with the high close doji. LE stands for long entry. Many of you would know that, right? And it gives you a long entry position. And we have a defined risk, which is the stop level. And we have a defined profit objective, which are those green dots. So what would make me want to be in a trade and maybe give a little bit more preference to one signal versus another? Well, if, for example, the volume starts to trend more positive, if the momentum starts to trend more positive, I would be more apt to take that buy signal, right? Looking at sell signals, these are just high and low close doji signals. They're not taking every system signal, right? Now, here's what's neat. Running specific scans under those criteria. If we look at a system and you have a specific setup, I can look at and define a buy signal and go with a scan feature on TradeStation. So many of you do have TradeStation, which is And their two features, of course, is what they're really known for, is, of course, the radar screen, which I'm here to tell you, it is one of the best products on the planet, the radar screen function, because I can take a look, and I'll share this with you in just a minute. I can take a look at numerous different criteria in different time frames, rank it, look at it, and scroll through literally hundreds of products and have an idea of what's on the board, so to speak, as a trader. Whether it's a day trade, that's a different story, but for equities, and I'll share with you exactly how we do this, but more importantly, I can run scans on a daily basis, and I can check for scans that, for example, show me how many daily buy signals when the weekly's been in a buy mode. That would be kind of a continuation pattern buy setup, right? Sometimes the weekly's in a buy mode, you get a little pullback, and all of a sudden I've got a buy signal on a daily basis when the weekly was in a buy mode after a few days pullback. That is a very powerful combination. It's a continuation pattern, so to speak, with what? An appreciation of volume. So if all of a sudden the market gives me a scan criteria that I have a daily buy on an uptick in volume while the weekly's in a defined buy mode, I can now look at that scan and say, gee, I kind of like that trade. Maybe I'll look at this tomorrow morning and start to examine whether I should be in that trade or how I could capitalize on that trade before the open, right? So I'm going to switch to a real the platform here real quick. And this is, as you see, the John Person package. Now, here's what's funny. I'm actually in the process, which is so cool to be able to do this and not break down, knock on wood, that we are running these scans right now. They're already doing it for me automatically, which are all scheduled. So what is kind of nice to see is just like we were kind of looking at, and this just happens to be cores, so we'll look at cores real quick. It's been in a weekly sell mode, and it's just been in a decline since approximately, let's call it November. Daily sell mode before it had its earnings, had a little buy, and it generated a sell, and then it's still in a sell mode. This is another kind of an indicator that we would look at, and it compares the relative strength of the market, and it goes into four different concepts. A market that's relatively strong, weakening, got a lot worse, and maybe recovering. It's kind of like four different ways to look at that. This is that volume indicator that we were talking about, and what's interesting is Michael Kors was trying to make a breakout to the upside. You notice that the volume trend was lower. So you can really make a lot of different conclusions of the market, and more importantly, way back when on a monthly basis, it formed that little monthly low close doji pattern. This thing hasn't seen the light of day, and until we start to see maybe longer term buy setups, this is a stock that I wouldn't even touch with a 10-foot pole. But in any event, this is a weekly. If you look over here, you'll see it's already labeled. So just to let you know, on these scans on our package, this is a weekly low close doji that we look for, weekly high close dojis that we look for, and we have different scans that we're running every day, and certain conditions I look for those, and I'll pay more attention to daily scans, obviously on an intra-week, especially if I'm looking for things to change. What helps me to define the overall market? I'm just going to introduce this to you, and we've done this through the morning briefings for an awful long time, guys, ladies and gentlemen. I used to actually kick off the morning briefings and share with you one of the neat things about TradeStation was, again, it allowed us to create indicators that really no other platform or no other brokerage firm has the capability of doing. One of the things that I found intriguing is the if you're looking as a stock trader and you always hear about the breadth analysis, the advanced decline, well, the advanced decline tool is used on multiple different platforms. Everyone has advanced decline comparative relationship ratio levels for the NYSE. What we did is we created, since we're not really trading the NYSE, and things have changed at the NYSE since the advanced decline comparative ratio was developed. And the concept is what's changed is approximately 60% of the stocks contained in the NYSE are interest rate sensitive stocks, real estate investment trusts, and bond funds. So that's not what we really trade, right? Some people are trading biotech, you're trading semiconductors, we're trading software application stocks like Intuit, Adobe, things of that nature. So what we did is we were able to create the advanced decline on the Dow Jones Industrial Average, the advanced decline on the Qs, the advanced decline on the S&P, the advanced decline on the Russell, the advanced decline on the NASDAQ Composite, which is available as well on other platforms. But since we're trading these markets, these other markets, I want to know what's the direction of the trend and what is the breadth or the strength of the market. Now, as promised, I said earlier, I'm going to go over a few things for both futures, day traders, and more equity traders. And one of the interesting components right now is how strong is this market? Well, the market, obviously, the breadth, the advanced decline has been making a consecutive series of higher highs and higher lows. We have not seen a single day and I got too crazy with the writing, so I'll get rid of it. But I'm gonna bring this up to your focus. We've not seen a market breadth reading break below a prior low. The on-balance volume shot straight the heck up. It's just a meteoric rise in this market. The volume histogram, remember what I was referring to earlier, a lot of traders have abandoned using volume histogram because the on-balance volume has, in a lot of years, has actually outperformed giving better information than the histogram has. And if you do use volume histogram, I don't want you to abandon it if you find it useful. But as I'll give you a real life example, right, and bring up prices. When we look at different combinations, I mean, here's the person's pivot. The market came right down into the election, right at support, and if you notice, generated a daily buy signal. I remember we were here together the day after that Thursday after the election. You guys remember, before the market opened, and I said the Russell is the place to be, the small cap, because the breadth of the market and the on-balance volume was showing, relative to the rest of the markets, a better performance. So let me share this with you real quick. With the S&P 500, we did get an uptick. X marks the spot. X marks the spot with that confirming buy signal here. And the funny thing is, volume accumulation and breadth accumulation is in sync with the rise in price, which is cool. Here's the volume histogram. As the market's rising in price and it's going up, the volume histogram is going down. So this is part of that dilemma that traders have been faced with. Same thing can be said over here last summer. Market's going up, breadth's going up, price goes up, and this makes people, gives a false sense of security. It's happened a lot in the last few years. Back in November, and I'm pretty sure they may be recorded, what we were interested in, and the reason we were interested in the Russell, and this is the neat thing of knowing where to put your money, you would be looking at, as the market came near the person's pivot support, these are the monthly person's pivots, right? I mean, it generated a sell signal and it came down right to support. The on-balance volume reading and the breadth reading was much sharper and more defined and we had a much better rate of return in the Russell at that point in time. So here's the dilemma that we're faced with right now. As the market has been surging ahead, we heard about the Dow yesterday, we know about the S&Ps moving up. This is the Russell 2000, and it just hasn't been accelerating like the other indexes. In fact, we almost are looking at a kind of a bearish divergence pattern, and I'm going to bring this up to you, which is bringing a major question mark as to the overall health of the rally right now. Small cap stocks are not participating as sharply as the large cap or blue chip sector stocks, or technology for that matter. The volume trend is showing divergence. Price has made a newer high than past or previous highs. The breadth analysis has made a lower reading high. So that in of itself is divergence, in that the accumulation of advanced stocks versus declining stocks in the Russell is not showing that this is as strong of a market, and there could be some trouble ahead. The volume on the rally, as the market made a newer high, as you can see, the volume is flatlining. So instead of maybe guessing and having you know, a little bit of knowing or not knowing where to put your money, these are indicators that are not really price-based indicators, are they? And so for equity traders, these are the things that we have put together for our package, and the things that I teach people how to use more efficiently. In that book that I mentioned, Mastering the Stock Market, we taught all about this in that book, which has been out now for, it's now 5 years old. I can't believe it. 6 when I first started writing it. I'm sorry, I just don't know where the years have gone. So person's analysis, I don't have to say person's pivots per se, but it's the analysis that we've put forth that is I think, the making indicators a little bit for the times that we're in right now. Okay, I guess that's the best way to say it. They're not really complicated. It's just that we put a little forth of information together, since this is more of an algorithmic traded, computer generated market environment, and I'm sure many of you have seen that, right? I mean, in this environment, it's like nothing happens, nothing happens, nothing happens. The market closes over a certain level, and then magic happens, a market breaks out. And that's where I wanted to point out it's not just person's pivots. Those, while yes, are available on TradeStation, but the person's indicators and the professional package is something else you may want to look at. And that's what the showcase is about. What do we put forth? So if you're a stock trader and you're looking for trades, awesome. This is new for 2017. We call it the PMC indicator. It's more of I would have to say, a relative strength. And basically what it says is, and shows, is that the market is getting, relative to the overall market, it's getting a little bit stronger. There's a moving average component. And as the market gets stronger, it fires off a different color. And then as the market, it might be looking good and it starts to weaken, it starts to show, since institutions, and you've been hearing this term, relative strength, it helps to define whether a market is getting weaker, getting less weak, stronger, or it is weakening. There's 4 states of the market. And if you get a buy signal, as the market is getting stronger, that will help fortify perhaps to be in that stock or that sector in the market. I'm here to tell you that that is one of the main components a lot of institution traders are looking at. We just put out a couple things. I'm going to share some ideas out there with you guys. For example, today, Caterpillar had a little bit of an issue. I don't know if anyone saw this, but Caterpillar, it's kind of an interesting situation when you look on TV and you see IRS and FBI circulating a corporate headquarters. Probably not good. But this is Caterpillar. Last year, Caterpillar was starting to see the relative strength improving. Volume indicator, this is the volume indicator, was improving. And then as we've gotten up over the last, let's call it 4 months, while granted it's made a higher high, right? I mean, we barely took out this high, right? Barely took out the high. What is this indicator showing? It's starting to weaken. And what is this indicator showing? Even on a daily basis, as the market was trying to break out, it was showing that it was in a divergence pattern. So this would be something that is more of a trading range, and it's struggling. And if you're sitting there getting ready to buy something thinking it's going to go up with the overall market's rallying, this thing is struggling. You know, here's a couple things that we've done recently. Tesla, for example. Everyone's familiar with Tesla. Tesla gave us some really nice, it was an amazing trade as it reached weekly person's pivots. We had a nice little buy setup over here. The daily was in a buy when the weekly was in a buy. So we had a nice little run up, but as this thing starts to make a secondary higher high, what's happening to its relative strength? It's starting to weaken. What's happening to the volume? It's starting to dry up, right? So instead of chasing a trade, knowing when to get in and when to get out is obviously pretty important. This is the monthly pivot, and that was the weekly pivot. They both had a confluence, by the way. It was a very formidable area of targeting that time frame. So when the market gets near a resistance, we want to kind of pay attention to that. One of the things that AVGO today, we had earnings. Avigo Technologies. Avigo, if you're a stock trader, this would be kind of important to you. Avigo's had a major breakout. Volume levels are not as strong as they were when the price was here or here. And the relative strength compared to the market is not as strong. It's starting to weaken. And so the market opens up near weekly person's pivots. This is an area that, while it could go up, I would be more inclined, and this is what we were looking at, selling this at weekly pivot resistance, not buying this market. So I think there's a couple things that, as far as looking at pivots, it's not just the daily pivots. And we can look at daily pivots because day trading the market is this is a typical day trade page that we put together. And this is the current, apart from yesterday, right, with looking at volume indicators and looking at the person's pivot. So if you're a day trader, the daily pivots are going to be really instrumental in helping to define what the market condition is. Apart from yesterday, when if you look in before we even opened and got into the door, the market blew right through its daily pivots. So what we also have created is a fantastic methodology where if the market is going up, we have these little things called the last conditional change candles, and it gives indicators that until the market violates that, you probably don't want to look at selling the market. So there is a lot to the person's pivot analysis. Defined momentum changes that are painted on the chart with arrows. The daily pivots, if I go to Format Strategies and I just hit Status and turn that off and hit Close, you will see that if a market with the indicators, as it gets near the projected pivot support, the green line, and gives that little high close doji, right? How's the volume looking? It looks pretty impressive, right? And so therefore, you know, maybe I should be looking at not really selling the market or wait for a defined sell signal. And if the market gets near the projected pivot resistance, maybe I should at least, if I'm interested in selling, now I could look at maybe some sell signal. So this is for futures traders. this is pretty instrumental. By the way, here is the system itself on radar screen. Now this looks like it's flashing and there's a lot going on here, but what I wanted to point out is that you have the strength meter of the market, whether it's underperforming or if it's coming back. You have your high close, low close dojis telling me what is flashing today. I have the buy signals on a daily basis. I have the weekly signals. So I know today, if tomorrow, Friday's close, if the market closes at its current price, at least looking on this screen, we have EWJ, which is the Japanese ETF market, and EWQ, which is the French market, and we can look at those charts real quick, are going to flash. There's the France dollar terms. It's going to flash a potential, which is really weird, right? Because everything's almost flashing a change of guard. But EWQ, by the way, if we close above that high next week, it's warning you that it's going to generate a potential high close doji buy signal. So I can look at this and say, well, what's the conditions? Is the momentum improving? No, the momentum's going down. Is the relative strength improving? No, it's negative. Is the volume improving? No, it's negative. So therefore, I probably would not want to take that buy signal. So therefore, it's a warning, and we got confirmation. What's really exciting about and powerful about this platform, and where it really allows you to get creative. I can tell you right now where a market is in relationship to its weekly pivot support and its percent change. Like Groupon right now is below its weekly support. And if it rallies, it's 16.7% away from its weekly resistance. And those are the weekly person's pivots and the support and resistance. So I've defined it in terms of percent. I've color-coded. If it's gray, it means it's below support. If it's gray in the resistance column, it means it's above resistance. So depending on what information you want, not only is it available on this radar screen package, but it's color-coded. Now, since some of us do not all trade daily, or we're more swing or position traders, we have, of course, the quarterly pivots, the financial quarters, and I can tell just by scrolling and taking this, a lot of the stocks, even on this little watch list, are at or beyond their quarterly pivot resistance. How do I know that? Because the color is gray. So right now, a lot of the stuff is already have rallied, and it's beyond or at its quarterly pivot resistance. And I can do the same thing to find out monthly. So radar screen, when we say we take person's pivots, TradeStation allowed us to take human hormones and steroids and exponentially turn it into a very advanced but yet simple and powerful trading platform that I can identify, I have information I want. What stocks or sectors are buying, bullish, or bearish is the entire sector. And if you look here, what we created was a list of stocks within those little subsectors. So the casinos, for example, social media, for example, and I can take a look at and find out on a given day, or how about this, on an intraday basis. I can change that interval from 60 minutes to 5 minutes to 15 minutes, whatever I want. That's something that's very unique and powerful and gives me, at a push of a finger, exactly what I want to know. So, for example, today, the weakest sector, GDX. What's interesting about GDX is that in the last few weeks, gold has risen and the gold miners have declined. And if we take a look at this together, we will notice that as the gold miners started to rise, and again, this is a weekly chart, by the way, folks, the gold miners started to, as they were going up, they were losing momentum. Gold miners still underperforming the market, and volume is depreciating. So the weekly analysis was not looking good. Let's take a look at the daily analysis. The daily analysis on the miners, it formed the high of the whole move was that low close doji up there. The momentum, as we started to make newer highs, we started to see a drop-off of the power or the move. So I'm going to zone this in a little bit. So what's kind of interesting is here we are looking at the miners, GDX. You're seeing gold go up, and you're thinking the miners are going to take off. And all of a sudden you look at this monthly pivot, and you get a daily low close doji alert, and you go, that to me is not bullish. That's bearish. How is the rally been? The momentum is bearish. It's showing a little bit of divergence. The volume indicator is also showed a bit of, remember, this volume is not in terms of value, but in percent change. And you've seen that the market is starting to lose its, it was rallying on negative volumes. And its relative strength to the overall market was declining. So this is an area that you would say, well, maybe I shouldn't be participating in GDX. And by the way, that is kind of the weird thing, because when we look at the similar situation with energy, crude oil has been above this 53, 54 range forever, right? But while it's been up, the energy sector has been down. And lately, a lot of people are looking to find value in the energy. And I'm here from a seasonal perspective. This is my trade, man. I come in on almost every single February, and I look for buy setups in the energy space. Now, the XOP, it is not really showing strong momentum. It's not showing strong volume. And relative to the overall market, it's not looking good. While we do have a buy signal, I would like to see this thing at least prove itself. Now, and that would be by closing and showing a little bit more strength before putting some cash to work here. Let's look at the OIH together real quick. Or try to. Here we go. Same thing. I mean, if you're looking at this, and if I can teach you real simply what this is looking at, the market trend is not up. It's kind of sideways to down. It's starting to show a little positive momentum change. Volume is flatlined, and the relative strength is still negative. So if I'm going to get bullish on OIH or XOP, I better start finding some positive volume changes. After all, look over here, right? Back in November, the election, the relative strength was moving. The volume was going positive. The momentum was going positive. We had a buy signal. In fact, you had that high close doji signal. And what happened? Beautiful sector liftoff, right? What looks different here and what looks different here? Well, first off, this isn't the same. That certainly isn't the same. And this is kind of not looking consistent, right? So if I'm going to look to be a buyer, I want to see these type of considerations. And this is a momentum price indicator. This is a volume indicator. And that's kind of looking at a relative strength type indicator. All right? All on one platform with person's pivots. So unfortunately, the pivot analysis, by the way, and I wanted to do this live for not selfish reasons, but we actually have a pivot. This is the monthly support. These are monthly person's pivots. They work just like the dailies, but they're at the end of the month. And so what you're looking at is maybe we have a little stronger support that the market could get down around 31.19 and as deep as 30.28 for the month of March. Now, I'm not sure we're going to get there, but I can tell you the volume doesn't look great, and we need to see some work. So I'm going to leave you with this. We have a last conditional change, and the market, if we break out on a close above this, and I have to bring this into focus for you. 33.12. If the market generates a daily close over 33.12, this will, and an uptick on the volume, and the momentum indicators start to fire off. 33.12, that's where we want to look, either buy the breakout at 33.12 or look for lower prices in OIH in the energy sector. That's the magic to looking for a buy signal and using this information for confirmation. So again, it's not just persons pivots. We have a package together. One goes with the other. If you're interested in a little bit more, you can always come visit our website at personsplanet.com. Go to Persons Indicators, Indicator Overview. PUG stands for Persons User Group. We have a user group. We have a lot of users that have this package, and we get together every month and discuss how the indicators are working. It's kind of a club, right? It's for our clientele that have TradeStation, the Persons Indicators. All right? You can also go to the App Store. I think Don had mentioned it's a pretty popular indicator, the daily indicator, and that is free. You can get the Persons Daily Indicator, which will give you your respected support and resistance, not 20 lines on your screen, just what today or tomorrow's expected range should be. That's the filtered Persons Pivot Indicator. Okay? Then, if you want to try what I've just demonstrated and test fire it, you can always go to the App Store, type in John Person. You're going to find again, the free version, which is just the daily pivots, but you can also get this advanced trading package. It is $159 a month for test trials. It's a free trial, and I would certainly recommend everyone go for a free trial. Now, if you're not a stock trader and you're not advanced and you're just day trading, then you may want to try the Persons Pivot Triggers and try that out. Come and visit a PUG group. Reach out to us. We'll explain how to get the most out of this incredible package. In addition, if you want to get this, we also offer a lifetime fee. So that's a one-time fee, and we have ongoing education for free, and that's part of the PUG group. So there are several ways to find more about this product, and in these difficult times, and I say difficult because the market, while Facebook's gone up, I want to share one chart with you real quick, which is kind of scary, right? This is Facebook, and here's what the indicators are showing. While Facebook is rising, see that white line in the sand? This is another white line in the sand. This is another white line in the sand. There are the last known signal is this buy signal, and Facebook is rising slowly. The momentum is going down, the volume is going down, and the relative strength is going down. This is not a good setup to be buying Facebook right now. Now, I'm going to point out this stock, PANW, because Palo Alto Networks just had earnings, and it was kind of what's the word I want to look for? It was pretty bad. It was brutal. I don't know any other way to say it. But I'm not saying that this is, the same. Again, past performance is not indicative of future results. But when a market rallies and the momentum starts to show divergence and the volume starts to taper off and the relative strength starts to get negative and starts to change and you fire off a sell signal near resistance, when you get those types of, and again, this was an earnings, I get that. But when you get these warnings that the market, while it looks good, something is amiss. And that, I think, is the combination that there's a lot of the names that are showing that are a little scary in this environment. Also, the decoupling effect between underlying stock and sectors like energy to crude oil prices. The decoupling between miners and gold prices, decoupling. There's a lot of inconsistencies within this market, and so in even this energy, besides the energy, this earnings season, look at this one. This is Dyne Energy, Dyne Equity, excuse me. I wanted to bring this to your attention because, I mean, man, it just hasn't been positive since way over here. So not everything is doing well in this environment, and it continues to, melt away. So there's a lot of names out there that while the market looks great and the headlines look good, there are some trouble spots in the market we need to pay attention to. And I think this year is going to be, and the next 4 years at least, are going to be pretty interesting between the battle between changes in fiscal policy and potential changes in monetary policies. This type of information will help keep you alert to the market conditions. And I really encourage everyone to reach out and take a trial and learn more about these sophisticated yet simple tools that I think are going to help a lot of investors in the coming months and years ahead. So I wanted to say thank you so much to TradeStation for allowing me to share my creations, my thoughts, and some of my innovations, because it all became not just of ideas, but yet a platform that has allowed me to do this. So I wanted to say thanks again to everyone at TradeStation. Thank you so much. And once again, if you guys have any questions about today's presentation, if you want more information, certainly contact us. Go visit personsplanet.com. You'll find a lot of great information there, videos, how to use the information. They're free. You don't have to sign up. We don't ask for your firstborn and all of that good stuff. So if you want us to contact you, then reach out. We will. Lord knows we don't need any more spam in our email box. So with that said, thank you very, very much. And Don P., thank you for allowing me to be here. And I look forward to seeing everyone the next time. And of course, on every other Thursday, I will be doing and do host the morning briefings every other Thursday. So next week, I will be here with you guys at the morning briefings. Thanks once again.